Ben Bernanke and the Federal Reserve unleash a new round of stimulus into the economy. QE3 is here. Everyone's been waiting for it. I'm Joe Bel Bruno. You've tuned into LATimes.com. I'm joined with Andrew Tangel, our man in New York City who follows the stock market in Wall Street. And then in Washington, Jim Puzzanghera, our correspondent there. All right. Well, you know what? Let's go to Andrew Tangel in New York. Let's get the idea of what the Federal Reserve is doing these days. Andrew, you talk to me about that.
Okay. Well, the Fed embarked on this third round of massive bond buying, and it on Wall Street, of course, is being met with a rally. Investors are plowing money into equities. The Dow's up more than 200 points. The S&P's up 24 points. The stocks are nearing levels not seen since 2007. Excuse me, my phone's ringing. Anyway, the effect of all this is that money will be cheaper, and the Fed hopes to put more money out in the economy to get investors out of less risky assets and into things like stocks. And I think Bernanke even mentioned this during his press conference. That there's also a couple of side effects here. When you increase the prices of assets like houses or stocks, it'll have the wealth effect for households. So people will feel richer as their houses and 401ks go up in price, and then they might be more likely to spend, and that could have the after effect of increasing demand in the economy. Demand, of course, has been weak throughout this recovery.
Andrew or Jim, I'm not sure on this. I believe there's sort of a magic formula for when you do this kind of economic stimulus, how long it actually takes to work its way through the economy. Do either of you have an answer on that? I believe we're having some technical issues in Washington, D.C. Andrew, let's jump over to you. There's always something fun going on. I know your phone was ringing earlier. It probably was Ben Bernanke complaining that he couldn't hear Jim Puzzanghera in Washington, D.C.
That's right.
So now we have the market up 200 points. It did get that pop. We didn't see it earlier in the day. Where do we go from here? Did any of your sources say that they expect that the stock market will get some boost in the near term out of this announcement, or are we just going to go back to business as usual next week?
Well, there are a bunch of different headwinds that could still cool down this stock market rally. The Chinese economy is showing signs of slowing down. You've got the fiscal cliff problem still looming. The automatic spending cuts and tax increases that Congress has yet to address.
Right. Well, let me interrupt. You said it. Yeah. You said the perfect thing that I wanted to get into. Fiscal cliff. Puzzanghera, do you have audio again?
I hope so. Can you hear me?
There he is. Yeah, talk a little bit about fiscal cliff. I don't know if you were tuned in to what we were talking about, but what are sort of the headwinds going forward? What is Bernanke and the Fed going to have to contend with? Fiscal cliff just starts in January. The next meeting for the Fed is what, December 12th, I think.
Yeah, well, the fiscal cliff is a problem, and Bernanke addressed that today, and he said that he expects that that'll be resolved, that Congress will find a way to avoid the big tax increases and spending cuts that are going to come starting the first of the year. But he also said that that's something that they have no control over, and he made that in the context of a broader point that their actions are not a panacea. They're trying to do what they can to reduce the unemployment rate and get the economy growing stronger, but they can't do everything. And the commitment that they made was that they would continue to do everything they can in terms of stimulus as long as the economy is facing those headwinds, which are the fiscal cliff, but also the European debt crisis, the broader slowdown in economies around the world. So he expressed confidence that it would be dealt with. He's warned lawmakers very starkly over the past year that they need to deal with it, and the question is whether it will get dealt with.
Yeah, and then of course there's the politics part of it all. I think Romney's camp came out. I don't know if you saw that statement. I don't remember it word from word, but basically they had said this is failed policies of President Obama, et cetera, just what you'd expect. Where Obama is I'm assuming trying to portray this as we're doing everything we can to help fix this economy. What do you think about that, Jim?
Yeah, well, it's important to remember that the Fed is independent, that the administration can't tell them what to do, although Obama did renominate Ben Bernanke, although people should remember that Ben Bernanke is a Republican, and he was originally made chairman by President George W. Bush. But the message, even leading up to this meeting, there was a simple message from a lot of leading Republicans, including the vice presidential nominee Paul Ryan, which was don't go there. They knew that the Fed was considering stimulus, and they warned them not to do it. And now that they have, there was predictably an angry reaction that the Fed was risking its own independence by acting this close to a presidential election. And there was a broader theme to a lot of the Republican comments, which was this is an indictment of the Obama economic policies. The fact that the Fed has to act right now means that President Obama and his administration have not turned the economy around and gotten the unemployment rate down. So that'll continue. There's already been a lot of heat on the Fed from particularly Republicans who don't like the fact that the Fed has dramatically expanded its balance sheet about 3 times more than it was 4 years ago, and this does not help. But Ben Bernanke was unapologetic. He said there's no political motive in their actions, and he said, and when asked how long the stimulus would go on, he said there wasn't a specific number that they had in mind. But he said what we've seen in the last 6 months isn't what they're looking for. So they're looking for some sustained lowering of unemployment, some stronger job growth, and they're going to keep doing this, keep pumping money into the economy until they see it.
Yeah, and we did get a lot of, we got some economic data rather today that wasn't too spectacular, and we'll probably continue to get that. And let's go back to Andrew. Andrew, do you have any final thoughts before we close out this this chat? What's Wall Street looking for next?
Well, I actually have one question for Jim. That's all right. It was my last thought, but I was wondering at what point the Fed will run out of options, and when there needs to be some sort of fiscal stimulus if the economy is going to keep dragging on. Bernanke really didn't say anything about fiscal stimulus other than the potential shock to the economy from the fiscal cliff, right?
Yeah, there's no real potential for fiscal stimulus, given the makeup in Washington right now, given the budget deficit. Part of the fiscal cliff stems from the deficit problems that came from the previous stimulus. So, I mean, the economy is growing. The economy is recovering. So it's just not going as fast as people would like. That's probably as much a factor of time as it is of additional stimulus. And resolving some of those fiscal cliff issues will probably go a long way towards reducing uncertainty out there, as much as trying to pump some more money into the economy from the government side.
Well, I think that's as good of a point to end it on as anything. I mean, we're just now going to wait to see if what the Federal Reserve did today is going to help stimulate the economy and how soon it's going to happen. And we've got an election coming up, and we've got that fiscal cliff coming up at the end of the year. So a lot going on, but at least for today, investors seem to like it. Wall Street moving higher, Dow Jones Industrial Average up over 200 points by the end of the day. Let's see how we close out the week and what the pundits say the rest of the day. That's it for us. I'm Joe Bel Bruno. You've tuned in to LATimes.com. Stay here all day long for breaking news and analysis, and we'll end it here. Thanks, guys.
Thank you.